I think it is difficult to overstate how big of a change the regulatory environment will be from the last administration to the new administration. This is really a very big swing in policy, and the market reaction that you've seen since November 5th reflects that.
Welcome in, everybody, to another episode of Coinage as we are digesting the market moves following a rate cut at the Fed yesterday. But Jay Powell, the Fed chair, coming out and indicating there may be fewer rate cuts next year than some people were expecting, as we're seeing Bitcoin try as it may, as it wants to do, it seems, to hold with that $100,000 level. And excited to have back on Coinage with us today the man himself, Zach Pandl, Grayscale's managing director of research. Zach, it's good to see you again, per usual, my friend. How you doing?
I'm doing great. Great to see you, Zach. Happy holiday seasons to you and all your listeners out there.
Thank you very much. Yes, happy holidays to you as well, as we pack up, I guess, everything on 2024 and look ahead. Not exactly a Christmas present under the tree, as we're seeing some jitters here, Zach, but do want to get your first take in terms of what you make of this sell-off, what you make of perhaps the waning moments of 24, and what people should know about what's going on right now.
Absolutely. Well, tons to cover with you here today. I would say that, yes, we've wobbled in the last several hours in crypto markets, but anybody that's involved in this space, whether you're an investor or a builder, founder, has tons to be grateful for. It's been an incredible year for digital assets, for Bitcoin, for crypto, especially in the U.S. market, where we had breakthroughs from the exchange-traded products, where the election result is likely to open up more room for innovation in the industry. So tons to be grateful for, despite the latest drawdown. And I'm happy to dig into this. The Federal Reserve, Jay Powell, said a couple of things yesterday that have led to a short-run setback, both on the outlook for interest rates and on the outlook for potentially a Bitcoin strategic reserve in the United States. And we should talk about that, clarify that for your listeners. But picking up where you started off, really the key thing was the interest rate message. They're still cutting rates. They cut rates yesterday, but they signaled maybe fewer rate cuts next year. Previously, they thought 4 rate cuts next year. Now, 2 rate cuts next year. That's positive for the dollar, and negative things for things that compete with the dollar, like gold, like other foreign currencies, and like Bitcoin. So that was the core message yesterday from the Fed, and why we've seen a very modest setback for Bitcoin's price.
Yeah, and I mean, when you dig into that too, right? I don't know. It seems like expectations, at least where they were, obviously everyone expected the Fed to cut. They did. But it's all about next year in terms of what that looks like. And when you dug into maybe, I guess, what the Fed is looking at when it comes to the data and the idea of their dual mandate, which is to make sure that inflation comes down and also that the labor market stays strong. I mean, when you look at those things and the new expectations from the Fed, some people are saying, look, this is a sell-off because, again, fewer rate cuts next year that might be bad for Bitcoin. But some people are saying that they're just giving themselves room to potentially say, look, we expect to see this. And if we get that, then we can cut further. And so I don't know if your expectations are like, look, yes, we need to get a sell-off out of the way because Bitcoin's rallied quite a bit. I'm going to go back to the chart in a sec. But the idea of how far we've come, some people are panicking because we're dipping below 100K. What does Zach Pandl say about maybe, hey, let's back up and look at the cycle historically?
Well, no question. There's absolutely no reason to panic in any sort of way. We've had a great run. We've of course had since the start of this year, and really since the election, it's been a huge run for Bitcoin, and no reason whatsoever to panic. It's a very conducive macro environment for our asset. You have a soft landing for the economy, the Federal Reserve and central banks cutting rates all around the world, and you have adoption trends for Bitcoin. This unlock created by the ETFs, created by the U.S. election result, and so there's so many positive things ahead of us over the coming year that panic would frankly be the furthest thing from my mind. That being said, Bitcoin is a macro asset, and when it behaves like this around a Fed meeting, people are disappointed that the price goes down temporarily, I guess. But it's also a sign of just the maturity of where we're at. Bitcoin is not some exotic thing in its own corner of the financial system. It's a $2 trillion asset right at the heart of the financial system and competing with big assets, the euro, the yen, the dollar, physical gold. And so, it's going to behave with macro events like all of those other assets. So I think take a step back, look at the big picture. We're in the intermediate stage of this crypto cycle, to my eye. There is no reason from a macroeconomic standpoint or from a valuation standpoint or from an analysis of prior cycles to think that we are anywhere near the end of what has been a really great period for crypto. So, you keep your leverage at moderate levels, at reasonable levels, and these very slight drawdowns are certainly nothing to worry about.
Yeah, and I think, it's also been interesting to maybe compare Bitcoin's outperformance. And you say intermediate cycle. That's what we've been hearing from a lot of our market guests who come on and say, look, let's compare where we're at right now relative to the prior cycles. And, we're going to be chatting with Pantera later on this week. But the idea that we spoke about with them before was kind of what happens next. And when you look at performance outside of Bitcoin, obviously shifting a little bit away from macro right now, Zach, but the idea of how Bitcoin maybe has performed against some of those other assets. Grayscale, increasingly, it's not just Bitcoin we should be talking about. Increasingly, a lot of other things being offered to investors as well. I mean, when you look at this stage of the cycle, outside of Bitcoin, it seems like it's been the outperformer this year, but what would you expect to see maybe in terms of interest and moves, correlations, as we get into that latter piece of the cycle?
Well, cycles are a important part of understanding crypto markets, even if they are something of a mystery from a efficient markets hypothesis standpoint. In this maturing asset class, as more and more sophisticated investors are involved in crypto, we may eventually transcend these 4-year cycles, but I don't know that we have transcended them yet. And so I do personally put some weight on the cycle analysis, and we look back to these past periods to try to get a sense of where things are going. From that admittedly limited data set, I think what we would say is that we are in an intermediate stage of the cycle, and we're probably at a phase where Bitcoin dominance should be coming down. Amazingly, Bitcoin dominance has been falling recently, almost exactly at the same time that it did over the last 2 cycles. So past performance is not necessarily indicative of future results. We don't know exactly what is going to happen next year. There are so many variables to keep in mind. But the cycle analysis itself suggests we can see altcoin outperformance, Bitcoin dominance declining over the next 12 months. And for a business like Grayscale, that's a perfectly okay outcome for us. We run a large Bitcoin business. Our low cost Bitcoin ETF, ticker BTC, surpassed $1 billion in AUM recently, for example. But we're also running more than 20 what you could call altcoin products for accredited investors. And so we service investors that are interested in the full spectrum of assets in crypto, from Bitcoin to DeFi to AI topics. And so, an altcoin season, I think, would be a good outcome for many of our investors.
Yeah, and I guess when we look ahead to next year, as you mentioned it, we're going to be chatting with SEC Commissioner Hester Peirce about what might happen at the SEC, what changes might be coming. That interview will be coming up shortly for us. But when you look ahead next year, outside of, I suppose, just the market moves, the idea of the excitement, I suppose, is still there when it comes to a new SEC chair coming in, the new administration coming in, a pro-crypto shift that seems to be happening. When you look at the timeline in terms of what people should expect next year, Zach, for those implications post-election, what is Grayscale's thoughts? What are you seeing in terms of, I guess, the biggest changes that investors should keep in mind? How do you see 25 shaping up?
Yeah, this is going to be really a central topic. The incoming White House, President-elect Trump made a lot of statements about crypto during the election season, and we need to see follow through on all that. I'd say the early signs are very, very positive from the nominees that we're seeing for different regulatory agencies, for the crypto and AI czar at the White House. I think the industry broadly speaking, is pleased with the early signs that there will be follow through from these campaign promises. What comes next? Well, the first step is getting all these names through the Senate. The president, many of these nominees do need Senate confirmation, and so that will be the early business of the new Congress, going through those hearings, voting on these nominees, getting them seated in the agencies, and beginning the work of providing a clear regulatory guidance for our industry in the United States. Legislation will probably come sometime after that on market structure, on stable coins. But I think investors should have some patience around this topic. There are many things that the new Congress will have to deal with. And the two big ticket items, probably before crypto, are taxes and immigration. So as soon as we get through these nominees, I think that those topics probably will consume much of Congress's time for the spring months, say, of 2025. And it'll be a few months down the road before the Senate or the House as a whole are taking up crypto-specific legislations. That doesn't mean we can't see progress along the way. We're going to see hearings. Of course, we're going to see agency officials make various statements. But legislation is probably not the very first thing that the new administration, the new Congress are taking up. So we'll see a lot of movement, but I think it will be still a little bit gradual, and people have to have some patience. I don't think we're going to see day one crypto legislation from the new White House, although I am very positive by the trends that we're seeing, and I think we will see comprehensive rulemaking from Congress over the next year or so.
I mean, what is I guess the biggest, before we shift back to the markets, because I think a lot of people right now are very interested in kind of what signals you're seeing that might give confidence to say, okay, things are fine, don't panic, and we'll get back into that in a second. But just in terms of what you expect or would hope for in some of those changes, because I do think it is worth noting, as I'm looking at over here, the picture of David Sachs, the incoming AI and crypto czar, standing next to the incoming chair of the Senate Banking Committee in Senator Tim Scott, a guy who was down in Nashville, Bitcoin Nashville, basically saying, hey, it's time, baby. Bitcoin's here, and Bitcoin's good for the country. So he's complete. It's crazy to think that guy's going to be, steering what's going on in the Senate Banking Committee. But when you look ahead to maybe some of those policy changes, what is the thing that might, that people might be overlooking, missing when it comes to, hey, this could happen, and here's what it could impact? Because I don't know. I keep looking at all of the funds now flowing into these Bitcoin ETFs, and there are things that right now you can't do, such as stake the Bitcoin on things like stacks or whatever. So is there something that maybe you're saying we could see completely change crypto in 2025?
Well, to your point, I think it is difficult to overstate how big of a change the regulatory environment will be from the last administration to the new administration. This is really a very big swing in policy, and the market reaction that you've seen since November 5th reflects that. I would actually highlight staking, exactly what you mentioned. There's lots of things that are going to be moving, on stable coins, on market structure, lots of different pieces. But staking is something I think very important, particularly for the Ethereum ecosystem and all the other proof of stake chains. We do have spot Ethereum exchange traded products in the United States, but the staking issue was not addressed, and I do think it does need to be picked up. There's nothing problematic about staking. It is a pretty battle-tested way to govern these distributed networks, and we just need clear rules around that. That will help an asset manager like Grayscale make various changes to our products that provide more benefits for investors, and I think it will provide some other unlocks. And so, in terms of priorities, that would be pretty close to the top of our list: is clarity on staking activity, and I think we will get that in the next 12 months.
Yeah, I guess we'll obviously ask SEC Commissioner Hester Peirce about that when we have her on. But going back to the market moves, Zach, I mean, when you're looking at this, what is giving you the most confidence? We were talking with Fundstrat the other day in terms of this spike in VIX, historic, in that I think it's the second largest move to the upside in terms of VIX spikes, volatility spiking. And usually after that happens, 3 out of 4 times it's recovered in terms of the losses in the market have come back 3 or 4 times within a week. 4 or 4 times within a month. And so when you look at that would give me confidence in terms of the last time we've seen panics like this, things recover quite quickly. What are you looking at in terms of crypto data that might say, hey, look, look, we had the Fed come out. This is usual. This is normal. Here's what happened in prior cycles. This is why. I mean, is there anything else that you're seeing research-wise that might also give
Yeah.
credence to the idea that we oversold off this?
Well, I think there's a couple of things. I would highlight funding rates in altcoins. We had a kind of altcoin washout over the prior couple of weeks before the Fed meeting, and funding rates came down quite a bit. Altcoin perp open interest, perpetual futures open interest is still relatively high, but funding rates are telling us that the degree of leverage, demand for leverage in the market is not excessive today. So I'd say that will be one. And the other one is just the inflows into the ETFs, into the exchange traded products, ETPs, for both Bitcoin and Ethereum. There is really consistent demand for these products, and that's a new piece of how the market behaves this cycle than in past cycles. We just have not had that type of buyer base, these long only institutional buyers that are making dollar cost averaging into the ETFs. That's going to be a source of support for these markets. I think that's been demonstrated this year. I think that will continue to be the case next year. Grayscale is on the front lines of this story. I can't tell you how many investors I have met over the last year to talk about these products, and there's just so much excitement about building crypto, building a Bitcoin and Ethereum into portfolios. I think that we're still at the very early stages of that adoption process, despite the dramatic inflows that you've seen this year. So I would highlight those two data points for me as giving confidence: the ETF inflows, moderate funding rates. This is a blip as far as things, as far as our volatile markets go, and really, no reason to change your perspective on where we're headed over the coming months.
Yeah, and I guess in terms of that, right? In terms of that narrative and maybe people understanding how much is still to come in turning on access to ETFs at some of the larger wirehouses, and the idea of advisors looking at things and saying, hey, maybe we should tell clients about this. I mean, the other thing that might be overlooked in all of that is the idea of the accounting changes for Bitcoin that, might not seem huge on paper, but I guess there are two narratives that we saw play out in 25 or 24. One being that the ETFs brought in a lot of money, as you just said. The other being that companies like Michael Saylor's MicroStrategy have been adding to their holdings, and we're seeing the Bitcoin miners maybe copy that same playbook now. But as those accounting changes play out, I assume it gets easier for other companies to follow suit. We haven't necessarily seen that outside of crypto companies. You still got El Salvador coming out and saying they're going to keep buying. I mean, what do you see as maybe the next marginal buyer that should be considered in these markets? Because, as you said, the ETFs themselves can still be that narrative in 25. If advisors are getting in front of more people, more money comes in. I mean, is there another one that you would point to in terms of that narrative continuing?
I would encourage your viewers maybe to look away from corporates as being the next most natural buyer. There are some special cases. You highlighted Bitcoin miners, for example, which are a critical central part of the ecosystem, of course. But for many businesses that have to meet payroll this Friday or next Friday or whatever, Bitcoin is not a very natural asset for them to hold in their treasury account. So it'll fit for some businesses, and of course we've seen a lot of that, but not for everybody. For me, the next set of buyers will be longer run investors that look over a multi-year period, 5 to 10 year at least investment horizons, and where Bitcoin fits naturally in the context of a diversified portfolio. So who are these investors? It's university endowments, it's state pensions, it's sovereign wealth funds. Those are the types of investors that are expressing to Grayscale the most interest in incorporating Bitcoin in the context of portfolio. And I think anybody that understands how these portfolios work and the benefits from diversification can see that. So I think that's where the next marginal buyer comes from, is big pools of capital that run diversified portfolios. Bitcoin and other crypto assets fit very naturally alongside the stocks, bonds, and other alternative assets that they're running.
Yeah, I also want to ask a little bit about that too, because when you mentioned endowments, and I think it was a state pension fund, forgive me for not having it in front of me off the top of my head, but we did see one of them allocate to Ethereum, which again is kind of the forgotten thing that happened in 24, because when they launched, it was not at all kind of like the excitement around Bitcoin ETFs. But recently, as I'm sure you would also note, there seems like an uptick in terms of Ethereum excitement now with the ETF inflows. I mean, what would you attribute some of that to? in terms of why we're seeing that now, and maybe what you can speak to in terms of how that continues?
To be perfectly honest, a little bit is the learning curve is education, but again, as being on the front lines of this process, educating investors about Ethereum, I can tell you that we are still very, very early, top of the first inning in terms of educating investors about what a smart contract is, what a smart contract platform is, what are decentralized applications. Mainstream investors don't know what these things are and only barely know what Ethereum is. So that only explains, I think, a very small piece of the recent inflows into Ethereum. I actually think the bigger story has been sophisticated investors like hedge funds using the ETFs as a tool for the cash futures basis trade. And very briefly, there are two Ethereum prices essentially in the market. There's the price that you get in the ETF, and there's a different price that is higher in the futures. And so sophisticated investors will do a long short trade, long the ETFs, short the futures, and bet on those prices converging. So that story has been a huge source of the inflows recently based on triangulating other data sources. And I actually don't think we have seen yet the broad-based enthusiasm about the smart contract trade, if you will, from mainstream investors going into the Ethereum ETFs or ETPs, exchange-traded products. I think that will be one of the big stories next year. And you need to look no further than President Trump's own activity in this space. The Trump family, for example, is increasingly involved in that DeFi space. I think regulatory change, I think more investor education will lead to more demand for Ethereum. And I think that really is the bull case, is that a greater understanding of the financial applications in particular will drive more inflows. I think we're at the very, very early stage of that process. And most of those inflows actually have been for the basis trade more recently.
Yeah, interesting. Yeah, I think we saw, again, we saw that kind of similarly play out earlier in the year around Bitcoin, I suppose, but also kind of, as you said, took a while for it to graduate, to mature into outside of just that trade, into maybe more actual endowments or advisors selling for clients. But you mentioned kind of that understanding and that process playing out for Ethereum. There's also beyond it, by the way, another piece of the market that has gotten a lot of attention, and that is in AI. I don't know if that trade necessarily sees the same type of enthusiasm in 2025 as it did in 2024, but certainly from a narrative perspective, a lot of people are excited about AI. Grayscale increasingly also paying attention in terms of some of the DePIN projects. I'm curious kind of what you expect to see in the AI trade for crypto as these two worlds kind of come together. We're seeing a lot of AI agents right now, maybe not fully be AI agents in terms of not really fully AI. But how do you see that evolving next year in terms of that excitement carrying over?
Look, it's a huge story. There are a lot of dimensions. It's a big bet for Grayscale. And again, I think we are in the very early innings of this story. You're right; it has dominated crypto mindshare in 2024, even beyond the ETFs, the halving, the election. AI really has been the big story this year, which is amazing to think of alongside all of the other news. I think it will again be maybe the big story of 2025. There are so many exciting projects, and they're touching so many different dimensions of the story. You mentioned AI agents, which is big and exciting and mind-bending in some ways, but there's so many other pieces of that. Decentralized data collection, decentralized computation and inference, and then projects that put all those pieces together that almost look like a full AI lab in one crypto project. And so, so many dimensions. We are definitely leaning into that investment thesis for crypto. We think that this is a very important piece. And I think outside of crypto native investors, you're starting to see traditional venture capitalists pivot towards this theme as well. So yes, it has dominated mindshare in 2024. If I had to guess, I would think it will dominate mindshare again in 2025. So we are definitely not taking our foot off the gas on the crypto and AI story.
Yeah, and I guess, when you think about where we go from here, right? It's not as if you turn the page on the calendar and everything is new again. A lot of kind of, I guess, what we're going to see play out is going to continue over into next year, but particularly for kind of, I guess, when you look with your technical analysis lens on, if you
Yeah,
if you have one, I don't know, not everyone always does look at it through that lens.
it's
Sometimes I
important.
think. Sometimes I think it's a little weird too in crypto too, because all this stuff moves so quickly. You can't really tell fully from a chart. But when we look at the chart, Zach, right now, it seems like we did really pop off above this, maybe got ahead of ourselves. You mentioned leverage being tied to some of this. We saw a huge washout in altcoins. I'm not sure necessarily if the same thing can be said about Bitcoin, and where we're at. But how important is this level to hold in your mind? When we're talking about 100,000, seems psychologically important, but in terms of the market, I'm not sure if there's anything to dig into there.
Look, I think it is psychologically important. And in terms of technical analysis or classic market analysis, I do think that there is one thing that changes when the calendar changes, and that is taxes. And so
Mm-hmm.
we very often do see seasonal effects in late December or early January. And there are structural reasons for that. Investors have to consider the tax implications of their buying and selling of assets that are subject to capital gains, which of course includes crypto in the United States, and often performance and other things are determined on a calendar year basis. And so I do think year-end technicals are something that active traders should be mindful of, whether you're trading equities or you're trading crypto. And this year, I think that is probably a positive technical factor for the price of Bitcoin in late December. It's been a very strong year for returns. Investors may have embedded capital gains, and so there may be some tendency to not sell those positions late in the year. This causes an effect we call the Santa rally.
Mm-hmm.
Often in equity markets, we could see continued support for crypto. Again, on a tactical basis, we're just talking about a couple of weeks now here, but I think that those sort of technicals can be important, and it's the kind of thing that we would incorporate in our short-term market analysis. We service investors typically that have much longer horizons than that, that are excited about things like crypto and AI. But we do need to provide this type of guidance to Grayscale's investors, and so those types of technicals are important in crypto just as they are in things like the stock market.
Yeah, I think generally the people who watch this show and read our content as well tend to have a longer investment horizon than 2 weeks, but it is
But it's
interesting to kind
important
of think
nonetheless.
about just from a perspective. And if we were to distill, I guess, everything we just talked about, Zach, as we wrap up here, the idea of people maybe watching this, I don't think any of our viewers are panicking off of a dip back down to 100K, because if you would have asked them a couple months ago, hey, Bitcoin's at 100K, we were all just celebrating that just like a couple days ago. So, I mean, when you distill everything down and you say, look, I mean, it seems like the general takeaway is, if you think something fundamentally has changed by the Fed coming out and saying, look, we might have fewer cuts in 25, then yeah, maybe you want to take some profits here. But if you think nothing has fundamentally changed, you're still in, I think maybe call it the third quarter of a championship game where Bitcoin continues to run. What distill it for our viewers as we wrap up here, Zach, in terms of, look,
Yeah.
yes, we had a washout, we dipped back down, but in general, nothing to fear.
I think the distillation is that the crypto industry itself has enormous tailwinds at the moment. This cycle analysis that you've touched on here, but the adoption trends that we're seeing for Bitcoin and the macroeconomic theses that drive that, all the technological innovation that we're seeing elsewhere, whether it's decentralized finance or AI. So left to its own devices, crypto has a very bright 2025. That being said, Bitcoin is no longer its own ecosystem. Bitcoin is part of many portfolios, is part of the financial system. So investors should consider those other macroeconomic risks. What's going to happen to trade and tariffs? Are we going to have government shutdowns? Where are we going to come down on taxes? These will drive broad markets, including crypto. And so if I'm considering risks for my own investments or giving guidance to Grayscale investors, it's really those macro factors or the political factors, geopolitical factors that I'm more concerned about than crypto itself. Our industry has the wind at its back for the time being.
Yeah, and we haven't even gotten there yet, too, to see all of these changes potentially play out under the new administration. Of course, as I said, going to have some early insights from SEC Commissioner Hester Peirce on what's going on internally at the SEC coming up on Coinage. But for now, Zach, can't thank you enough for coming on. Happy holidays to you, as we said off the beginning. Happy holidays to you, yours, and the team over at Grayscale. But appreciate you making the time to chat and maybe give some calm on what is a less calm market today. But in general, I think I would share the same sentiments. Thank you again for coming on, man.
My pleasure, as always.
Yeah, it was exciting. Very good. We'll see what happens. Continuing tracking all the big headlines in Web3, as always, from the only community-owned Web3 outlet in the game. You can learn more at Coinage.media and catch up on the biggest headlines in crypto. For Zach Pandl over at Grayscale, for myself and everyone here at Coinage, thanks again for tuning in. We'll see you again soon.